All right, thanks for tuning into India Market Close. We are counting down to the Finance Minister interview, and we have Dipali Goenka of Welspun Living joining in moments from now. But let's take stock of the market and what they've done. And so 0.82%. Now, lest this look impressive, the problem only is that we are off the highs of the day. So we crossed 22,000, almost nudged 22,100, and currently at 21,873. So it's been a bit of a downtick. The advanced decline ratio should come up on your screen in moments from now, just to show you if there's a pain at the broader end of the spectrum or no, and rather relative to what they would have done. So as you saw, it started off really well and now has petered down. In the last hour and a half or 2 hours of trade, we've had a bit of a narrowing of the breadth as well. The heat map next on your screen, and remember, it was dominated by IT, Adani Ports, to an extent a couple of other stocks, and a very little red. We still have little red, and iShares is still the top loser. The gainers list though has BPCL, HP IOC, ONGC, so oil upstream is doing extremely well. There is strength in Adani Ports, but not that much. NTPC, Coal India, Power Grid show that the rally in the power stocks is well and truly alive. And you know, if you just look at the broader end of the spectrum, Tamanna as well, the likes of Inox Wind, Suzlon, etc. just show that somehow power remains that sector that people log in at the first sign of an issue. What is the broader end of the spectrum showing? Absolutely.
A broader end of the spectrum also participating in this, but BPCL up 10% is really telling you the extent of the story. Quite astonishing. We're going to look at a stock that's not doing too well. I have to talk about Paytm because there is just no reprieve in sight. It's not moved from that 20% lower circuit for the last 2 trading sessions, and you're seeing that follow on there. NHPC has seen a set of large trades, and we'll just pull up NHPC very quickly, another counter that has done well. You'll find a lot of them in the market today. I'll just quickly talk about Easy Trip. Numbers have come out, and they're also considering a QIP of about 1,000 crores. The entire hotel, hospitality, tourism space also has been having a pretty good day. Just a last couple of them. Niraj spoke about energy, Urja and Wari. Thanks to the solar push, have also seen a good uptick. So thematic plays, but overall the sentiment very, very positive this afternoon, Niraj.
It is looking extremely constructive, and it's a packed show. We have the FM interview coming up in about 25 minutes, but before that, an interesting set of numbers that came out a couple of days ago, and that's Welspun Living. A strong quarterly performance, you have to admit. They recorded the highest quarterly revenue, the company, and it came in on the back of decent growth on the EBITDA front as well. 67% uptick YOY on the EBITDA front, so strong showing there as well. Ms. Dipali Goenka, MD and CEO of Welspun Living, joins us on the show. Ms. Goenka, good having you. Thanks for taking the time out. Niraj here, good afternoon. Was this something that you had penciled in? Because we were talking about how textile companies are having a mixed bag, but you are no longer just a textile company, doing a lot more beyond that. So is this something that was on expected lines? And do you expect that this could be the new normal on the operational metrics, margins in particular?
Yes, Niraj, absolutely. So we no longer are just home textiles. As you know, we actually have these emerging businesses which are, flooring, advanced textiles and retail, which now contribute 35% to our top line today and have grown 21% year on year. And this actually is going to be a mixed bag, which will have our core businesses, which are our home textiles, along with our emerging businesses, which will contribute to our top line. And of course, they're also going to be across the geographies globally. So like the domestic business, which has grown 20% year on year and 10% quarter on quarter, is an opportunity, as you see. Our flooring business, which grew 46%, actually owing to even, the global markets where the China plus one is really playing very, very strongly. And India, where hospitality, institutions and residential are again coming up strong. And we also saw that in the budget's announcement as well, that India, towards the journey of 5 trillion, how the focus is on the long-term perspective of growth as well. So yes, that is where it is going to be.
Expect the momentum to continue into, let's say, I know it's a bit seasonal, but I'm just trying to understand, could Q4 or the usual momentum could continue into FY25 as well on the growth front?
We are committed to our numbers in the terms of growth, Niraj, and it's absolutely That's what we are working towards. As you know, we had committed to a growth of around 12% and the EBITDA of around 15%. We have actually revised our growth to 15% this year annually, and we'll continue and take this on for the next year as well. So this is absolutely intact as the way forward as well. And we have always talked about 2026 as a number and a milestone. That is like end of 2026 as a top line of 15,000 crores with a mix of all the businesses where 45% will be our emerging businesses. So yes, that's what we are working towards.
Considering what you're clocking in the current quarter, people might be deceived to believe that is a bit conservative as well. But hey, under-promising and over-delivering is always great. I was just wondering, what I also meant to ask when you had talked about the growth was the quality of growth. The return ratios have shown an improvement vis-a-vis 2023 or FY23, if you will. And again, it is a business which is dogged by various moving parts in your case. But do you reckon that these double-digit, mid-teen double digits or higher-teen double-digit return on capital numbers could be something that you would strive to achieve as a normal?
So, you know what? Last year dipped to 5.7%.
Right.
And we spoke last year, this quarter. This year, if I talk about this quarter 3, it is annualized like 15%. And we had targeted this number for this quarter and for this year. And we'll continue to have this double digit. It has to be. Even the projects that we're investing in, if you know about our jacquards in manufacturing and pillows in America, the ROCE prudence remains at 20%, which we are taking on. So yes, this is a very strong focus on whatever we do, Niraj, actually.
Okay, in fact, let's talk about that. We're talking about private capex not quite coming through, but coming in bits and pieces. You guys are doing some serious private capex. Talk to us about these. When do the facilities come on stream? And what do the various phases of capex coming on stream mean for growth numbers for you?
So, yeah, let me give you a perspective here. So earlier we spoke about a 30 megawatt power plant, which we were talking about around 300 crores. We have already spent around, say 230 right now. For the next year, which I'm talking about is the jacquard towels and our, beach towels, which we are investing on a brownfield, in our Anjar capacity, and pillow factory in America. This actually gives us and these all will be operational half two. But yes, that's going to be the kind of the shelf space. And I always talk about the shelf space because I always say that it's not just towel and sheets. It is also owing to the related, complementing products. So this actually, gives us a wider, kind of a opportunity of products, even in kitchen towels, fashion towels, and beach towels, owing to opportunities that are there where India is focused. Pillow becomes, it's a great opportunity. It is as big as the towels, 2.6 billion in America. Gives us a shelf space growth and, closer to the customers. We already have our warehouses. So yes, that becomes a good opportunity for us, Niraj.
Okay. Well, we wish you all the best for that and more. Thanks so much for taking the time out and speaking with us. Congratulations on a good quarter and all the best for many more.
Thank you, Niraj. Always great talking to you.
Likewise, Ms. Goenka. Well, that's Wellspun Living, confident Dipali Goenka talking about targets set out and internals as well, including return ratios. By the way, before we take that breather and take that break, must say the oil and gas space is doing anything else but taking a breather, because just look at oil upstream or oil downstream. There is just terrific gains packed there. We come back after this break and talk a bit about that between me and Tamanna, as well as getting experts to talk about how do the charts look for some of those stocks.
Welcome back. Markets in a buoyant mood have slipped from the 22,000 levels and from the day's high, but hitting strong and staying up strong nevertheless. Can't say that there's weakness from any angle of the day's highs though. What is really powering and fueling the markets truly is the power space, oil and gas, even the renewables to be honest, but specifically on oil and gas, an astonishing kind of a scenario. BPCL about 11% up. Look at IOC, HPCL, ONGC, all of them completely flying. Now, a couple of things to understand why this is happening or factors around this. And, you know, Niraj, so one, you have the crude play. Crude prices up, instability there. We were speaking with Mark Matthews this morning, who says that he thinks US will figure it out. Biden doesn't want crude prices rocketing before an election. But on the other hand, from the budget perspective, all the government's done is actually cut the amount of money they're going to give to these companies to go renewable. They've halved that amount. But that doesn't seem to make a difference because of their profits. Yeah,
one, that the amount maybe, actually you're right, the profits and the valuations. I think that's probably the story, because remember, today is one thing, Tamanna, but we marked this a few days back, 4 or 5 days back as well, when the oil and gas stocks had a massive uptick.
Yes, you did in Editor's Cut.
Which was on 24 Jan, and then I think 28 or 29 Jan, just before the budget, ONGC was up some 7-8% on that day, and the Oil India was up about 3% as well. So we're seeing this big gains coming in for stocks like GAIL and City Gas Distributors. It's LNG. Now, the lower LNG prices which are probably playing out for stocks like BPHP, IOC, just the stability of earnings and the valuations. Somebody was talking about how if you look at the net debt numbers for some of these companies, BPCL at a net debt of 6,000 crores on that market cap and that size, you could argue it's virtually debt free, because 6,000 crores net debt is virtually nothing. So when was the last time people saw the finances of these companies being so well managed? And then, I mean, when you think of the overall PSU pack having rallied, these are probably the few stocks which are available at multiples which are maybe still single digits, or now after the rally, early double digits, which is actually not too bad at all. So I think that is what probably seems to be working. One of the factors that seems to be working, Tamanna.
Well, let's get Chandan Taparia's view on that. He's head technical and derivatives research, MOFSL. Chandan, very good afternoon. But before I come to you on the oil and gas piece, let's talk about the markets and the levels that you see here. 22,000 breached and back. Do you think you're forming now a stronger base at these higher levels? Bank Nifty and Nifty IT. Nifty IT also, by the way, having a great day, about 2% up. So your take on the levels first, Chandan.
Yeah, so before I talk about the levels of market, let me first start with India VIX. In last 2 trading sessions, we have seen decline in the volatility. However, intraday swings are there. So decline in the volatility indicates that now budget and volatile cues are away, and market will move as per its level and setup. So talking about Nifty, today we made a new lifetime high. Earlier high was 22,124. Today we made high at 22,126, and after that some sort of profit booking decline was seen from higher levels. But the structure is intact. Declines are likely to be bought. Supports are shifting higher, and we believe that till Nifty holds about 21,700 zone, any small decline could be bought for an upside move to us 22,200 kind of levels. Now, if I talk about the Bank Nifty index, Bank Nifty is slightly underperforming from last couple of days. Today it headed to 46,900 zone, but then corrected by around 500-600 points from higher levels. So underperformance could continue. Bank Nifty may trade in between 45,750 to 47,000 zone for next 2-3 days. But yes, buy on decline will continue in the Nifty index from current level as well.
Okay. Chandan, with this in mind, actually, let's get your stock picks first, and then we'll come to you on oil and gas. What are the ideas that you're giving us this afternoon?
So the idea is very clear, be with CPSE, Central Public Sector Enterprises, be it PSU, oil marketing companies, or you can select selective metal and mining. So that is the clear winning streak we are witnessing. So let me start with the first, that is buy on NMDC. We have seen strength coming in the counter. It has seen some short covering, and consolidation breakout is visible after 19-20 long trading session. So recommending to buy on NMDC with support of 230, and it has potential to move to us 248 to 250 kind of level. Apart from that, most of the oil marketing companies are likely to do well. However, all these stocks have rallied by 8-10%. So now I'll focus on Hindustan Petroleum, which is up by around 5-6%. Trend is intact. one can buy with support of 484 for an upside move towards 510. So positive on NMDC, selective oil marketing companies, and most of the CPSC or public sector stocks in this market scenario.
Actually, and before we talk to about PSU banks with Harsh, Chandan, you gave an oil marketing company. I'm just trying to understand what are the targets that you foresee for any of these oil upstream, be it ONGC, BP, HP, IOC. What are the slightly longer term or medium term targets that you're working with here? And can this current move continue tomorrow? Not tomorrow, sorry, on Monday, Tuesday as well?
Yeah, so let me first talk about IOC. We have seen decent run up in last couple of months in the counter. In last 4 months, it rallied from 90 to 164. So you can understand 70-80% move was there. If I look at the yearly chart in 2017, high for the stock was 154, and today we have surpassed that high. So we clearly see 7 to 8 years long consolidation breakout, and it is entering into the new lifetime high territory. So further 20-25% momentum cannot be ruled out. We believe that now 155 could act as a major support for a rally towards 185 to 190 levels in IOC. That comes to 20 to 30% descent upside from current zone. Now let me talk about BPCL. BPCL again, major breakout is visible. In 2017, it made high near 561. Even in 2019, high was 560, 550 zone. So that 550, 560 zone is now big, and decisive move over the same will open for the 20-30% movement. So when you talk about BPCL, we are looking for an up move towards 610, which is 10% from current level. So positive stance on both, as we have seen major consolidation breakout on monthly, weekly, and the yearly chart.
So 610 on BPCL is what Chandan sees. By the way, what is also perhaps moving for these companies is that they have not had to take any price cut in petrol, diesel prices for over 20 months. Possibly one could come before the elections, but they have now the coffers to deal with it. Keeping the focus with public sector companies, and now let me move to PSBs. PSU bank rallies have continued for the second consecutive day. SBI, Bank of Baroda, PNB are all in focus. Harsh joins us with what is driving the PSU banks. Now, Harsh, the fiscal deficit squeeze, or the intent to stay on the fiscal deficit path and tighten the belt, is music to the ears of the banking system and the PSBs. But is there a bigger story here?
Well, yes, you've, of course, some of that optimism is led by the good budget, so-called, with regard to where bonds are concerned. But, there are certain points that I want to cover, certain bases. Let's first look at, the weightage to try to determine which are the top constituents. You look at the likes of an SBI, BOB, PNB, CanBank, largely 70% in terms of weightage on the Nifty PSU Bank. And the Nifty PSU Bank itself has rallied 16% year to date, 32% last 3 months. 6 months, 48% returns, and the last year, 76%. Really unheard of in terms of their returns. That's how the valuations essentially stack up. You have those valuations. What's really driving the valuations, ahead of what it has been over the last 10 years is, and I'll highlight 4 key reasons for that. One, growth has come back in a solid fashion. You are seeing them clock double-digit plus growth over the last 2 to 3 quarters. So that's one. Margins haven't diluted despite a difficult margin environment. They've been able to hold on to their margins also because their loan to deposit ratio is quite decent, and therefore they haven't been able to, haven't found the need to really fight for deposits even in a high growth environment. Third is your credit costs have been steadily coming off. Your NPA ratios have been improving quite dramatically. And asset quality system-wide is quite solid, and therefore you're not able to differentiate between a PSU as well as a private bank. Lastly, your ROAs have corrected very, very significantly. You're seeing all 4 of these banks clock ROAs nearly 1% or 1% plus. 3 of them definitely doing 1% plus, and that's the big positive coming through. So 4 key reasons why they're doing so well, and that change seems to be happening. That re-rating clearly seems to be playing out even on valuations.
Yeah, absolutely. And, we heard from, I think, the biggest PSB bank, the biggest PSU banker as well, Dinesh Khara today. Thank you for that, Harsh. Let's just play out a clip of that conversation that we had earlier on NDTV Profit with Dinesh Khara, who was talking about what he expects from the RBI in the next MPC meet.
very important question. Soon after the budget, we have the RBI policy coming up, rather MPC meeting coming up on the 8th. What do you think will be the tone of the RBI? I think things are easing out, though liquidity has been tightened. Do you think that RBI will be slightly more dovish than what it was over the last quarter?
I think perhaps I'm not expecting any kind of a change in stance or the direction as of now, but maybe they will. MPC would have even much more data, which I'm not privy to, so I'll not be in a position to really comment much on that. But my overall sense is that perhaps it is likely to be the tone and also the direction should be what it was in the last policy.
No hike expected immediately by Dinesh Khara. Chandan Taparia with us. Chandan, anything you like in the PSU Bank pack? Where do you think, some kind of an upside exists? And look at Punjab and Sindh Bank today. I'm not sure why that stock is firing, but you have a complete crazy ride up. Chandan, anything which is on top of your list?
Yeah, so we like most of the PSU name, whether you talk about PSU banks or defense, railway, energy, power. I believe the PSU theme or CPSC theme will continue in the Indian markets. If you start with PSU banks, then I can talk about a stock like Canara Bank or PNB. So starting with Canara Bank, we have seen a consolidation breakout. It is making higher top, higher bottom. Longs were added. So buy a decline towards 510 with support of 500. It has potential to move towards 530. Tomorrow we have SBI result, so that we need to keep in mind. Because as per the result outcome, some sort of volatility could trigger in the counter. But as of now, positive on Canara Bank. Then you can focus on selective power name when you talk about PSC or PSU, whether we talk about Power Grid or NTPC or other name. So I think these are the stocks from power and energy you need to keep in mind apart from PSU and apart from banks and PSU.
Absolutely, PSU banks definitely doing well. Very short break, but don't switch that channel if you're watching this on a TV, because of the big first and exclusive interview with Finance Minister Nirmala Sitharaman and Editor-in-Chief NDTV Network Sanjay Pugalia coming up in just a few minutes from now. Stay tuned.